if you watch till the end of this video, then there are high chances that you start seeing booming crashes. It's easier, and it will surely be a lot easier, but that is if and only if you are able to backtest this strategy and try it out on demo first, practice it on demo until you get the hang of it. So in today's video, what I'm going to do is I'm going to show you a simple way that you can use in order to enter the booming crash, right? So a simple strategy that you can use, as if you want to catch spikes or ticks, right? This strategy works, right? So what are we going to be using, right? So what are we going to be looking at, right? So I'm going to show you the types of pullbacks that we want to see, right? And I'm also going to be talking about zone flips, right? So let's just talk about what zone flips are, right? So let's say we are going in and we are in an uptrend, right? So like this example over here, right? We are going up, we are continuously creating a series of higher highs, higher lows, higher highs, higher low, higher low, and higher, blah blah blah, right? So right over here, what we want to look for is we are creating what, a higher high, then a higher low, and when we break past this area over here, we're anticipating that the market will reverse and go up, right? So I'm sure that most of you have read this in your price action or seen a lot about this strategy over here, right? So it's just the theory that a broken resistance becomes a support, right? And a broken support becomes a resistance, and simple as that, right? But I'm sure that most of you don't know how to select which area is going to be respected and which area is not, and that's when the pullback that I'm going to be showing you comes into play, right? So what we want to see when the market is pulling back, right, is we want to see we want to see it consolidating, right? And if you have subscribed to my channel, I'm sure you know this by now, right? We want to see something like a consolidation or a slowdown in momentum, right? Maybe we can start you can start in fast, but when you are about to reach let's say maybe with the pullback over here, right? So maybe we mark this area also here over here, right? So maybe we may start by coming in fast, right? And then when we start to slow down over here, right, this shows that this area is likely going to be respected, right? Unlike a pullback that just goes let's say we are going up, right? And then this area over here, right, we mark that area, right? We don't want a full pullback that it just comes in fast like this, and it will to continue going up. Why? Because this shows that the market still has momentum, right? And if the market still has momentum, guess what, there are high chances that we can just break past this support area here and continue going downwards, right? So that in turn will make us lose a lot of money, right? So and this also helps our chances of selecting your areas, right? So maybe we've got two support areas that we are looking at, right? Maybe we've got this support over here, right? This one over here, and maybe there's another area over here. So if the market is still coming in fast over here, we know that this area is likely going to be violated, right? And the market maybe wants to come back and test this area over here. So this is the selection criteria for us to enter our trades. So over here, what do you want to see? And I don't want you to treat zone flips as a single level. I want you to treat it as an area, as a zone. And so yeah, it could be better if you just along with the line, right? You also prefer that you use the line so that you know that the area you've marked is a zone flip, right? Along with the line, maybe you can combine it with the horizontal box, right? With the boxes over here, maybe you can do that also. But over here, right, as you can see over here, when the market is going out, it's going up, right? We've got a breaking market structure, then a pullback, right? So as you can see over here, this pullback over here is consolidating. It's giving us red candles, green candle, red, green, red. It's continuously giving us red and green candles continuously, right? So it means that the market doesn't have the momentum to break past this area over here, right? So likely we are going to respect this zone over here, right? And we are not going to test this area over here, right? So we've got two zones over here, either entering over here or we wait until the market pulls back to this zone flip area over here, right? So those two options, right? And when you start to see that the market is already showing the slowdown in momentum, right, we'll anticipate that it will respect this first level over here, right? And I think if I've come across an example that doesn't respect the first level, I will show it to you, right? So these types of setups, they need you to practice, right? So that's why I want you to practice on demo until you get them right. So over here, right, we've got a breakout again. So you just have to shift your resistance areas, right? So over here, the market doesn't pull back exactly at that point, but if you had marked the zone, you could have entered, but most probably this one would have missed because it's a little bit too far, according to me, right? It's a little bit too far from me, right? So when there's another breakout over here, you just have to continuously move your resistance area, right? And right over here, when it comes back and pulls back over here, we've got what? Our morning star formation, right? We've got this George candle over here, and after that you can enter what? You can enter your trade, right? So that's just what you have to do, continuously marking what? The recent highs, and if the market doesn't pull back to it, then that's okay. You still get many more chances to enter it. So this setup over here has got many chances for you to enter, right? So if the trade misses you, right, like this example over here, the market didn't pull back over here, and maybe you want to mark this area over here. We've got two resistances over here. When they get broken, the market pulls back to it, and as you can see, it starts to consolidate on that around that area, right? And when you see a consolidation, it likely means that we're going to respect that area, and we've got what? We continue going up, right? Continuously doing what? The same thing, a pull back to that area again, we shoot up, right? And right over here, we didn't quite pull back to this area over here until somewhere at this point over here, right? And that's when we took our entry. Let's see for a downtrend, right? Let's look at the downtrend, right? So over here, maybe we mark this zone over here, right? The market didn't pull back to this area over here because we've got a breakout over here. So we're in a downtrend when we broke what? This structural point over here, when we broke it down, right? So the market didn't pull back to this area over here, to this area over here. So we mark our next zone, right? Over here, we've got a breakout of that area over here, right? And the market pulls back to this zone over here. But I most probably wouldn't encourage you to enter over here because this is the type of pullback that we don't want, because likely the market can just break past this and continue going up, because it shows that it still had momentum, right? So we won't be able to decipher if the market is ready to go down, to continue going down or not, right? So this most probably would have missed that entry over there. Then maybe you mark this area over here, right? So you just have to continuously keep on moving your resistance levels or your support levels. Let's take this for example over here, right? We've got a support level over here, gets broken, retest, and you enter, right? And you mark that area again, right? So over here, we've got a breakout of that area, retest, and you say, all right. So it's very simple, guys. That's what you just have to do, right? You just have to look for the zone flip, right? And after looking for the zone flip, make sure that the pullback is in a correct manner, right? So over here again, with the breakout pullback, right? It's a very simple strategy. Right? So let's see if there's that example that I was talking about, to see if a zone is likely not going to be respected or not, is right. So let's see, blah blah blah. Oh, well, they had already. This one would have almost worked, but we're not talking about order blocks right over here, right? So this over here, we've got what our zone flip area over here, right? The market is pulling back to it, but as you can see, it still has a lot of momentum, right? And it broke past that point, right? And then over here, it starts giving us a red candle, continuous. Then it starts to consolidate. It's forming so like a head and shoulder if you drop down to the lower time frame over here, right? So now we know that since the market doesn't have a moment, there still has a lot of momentum over here. We're not going to be looking at this zone, because likely the market is going to break past that point, right? So we don't consider this point over here, right? And the market, as you can see, it came back to retest this order block over here, right? And when it tested that order block, it continued going down. So if you want to learn more about order blocks, then I suggest you watch my supply and demand video right over here.